collaborative law practices. So this is my secret sauce. Collaborative law practices where you have typically higher net worth families. They're both in agreement or somewhat in agreement of getting a divorce. They know that having their own attorneys is going to cost them a ton of money. So they work with a collaborative law practice. So each spouse has their own attorney, but it's within the same office. And they're coming together and working together amicably. It's much more friendly. I can tell you as a mortgage professional, it's much more friendly to work with those particular scenarios. But this particular real estate agent works very closely with this law practice, and one family, 7 years ago is where it all began. She has had 12 transactions from helping this one family. In 7 years. What could you do with that? From one realtor, one attorney referral. That's pretty good, right? That's not including any of the family and friend referrals that she's gotten. I won't tell you how many times one of them has been divorced. So children thrive in their own parents' home. We know that, right? So whether it is the house spouse that's taking care of the children, staying in that home, statistics states that they learn better. There's no disruption in their school and their friends' lives. So emotionally, mentally, educationally, it is better for the children to stay within their own home, right? Rather than them being uprooted out of their home, their family, their friends, their schools, and then living in an apartment. Right? It's detrimental to the children. Now, in a situation where you have to sell the house, if we vetted the property and vetted the ability, homeownership eligibility, and creditworthiness, there's a possibility that we could help that family be able to buy another home in the same community with less disruption and still living in the home that belongs to them. Stability for the family, still. Have you heard of that before? No. Well, so I want to go. You have a handout, right, on page 2? Oh, do we have any more handouts out there? The packet? Oh, great. Thank you. I'm running a little behind. So are you all okay if we do a little bit of, get our lunches in just a little bit? We'll do some networking after I finish this piece, and then we'll jump into the second class while you're eating. Is that okay with you all? Yeah? Because I still have so much more to share. I talked too much. Oh, Maria, did you get one? So I think on page 2 of your handouts, okay, so let's do a test. On page 2 of your handouts, there should be a quiz. So I'm going to ask you some questions. I just want you to write down your best guess. And then we're going to go over like the truth, okay? So here we go. So when, is the first one, when are most? Yep. So when are most divorces filed? Anybody have a guess?
6 years.
When are they filed? Within 6 years? How about, yeah, that could be true. How about the months? January. Okay? Which spouse is your target customer? I'm not telling you yet. Which spouse do you think is your target customer?
Wife.
Female. Interesting. Depends. Depends. You don't know who that might be, right? When during the divorce timeline can you be of more help?
Before the divorce.
Which demographic has doubled the divorce rate since 1990?
What do you mean?
The silver generation.
The silver generation? Okay, number 5. What percent of second and third marriages fail? Who files more, men or women? What do you think is the percentage of divorces are filed by women? And what does RCSD stand for? You could cheat. It's right on the page.
Yeah.
Okay, so let's go through the details of the answers. So most divorces are filed in the first quarter, January, February, and March. So whoever said January, awesome.
Why? Why? Because money. No money after holidays.
Because that's exactly right. Because the holidays are over, it's usually family time. It's a less chaotic, right? This is just when we know also that the most filings for divorce nationally are January, February, and March. And it is because holidays are the family time, right? So as you can imagine, it's more difficult to say I want a divorce at Thanksgiving than it is to say I want a divorce in January, March. The other time is there's a big spike in August. Why do you think August?
Because school.
Yeah, schools. We've got children going away to college. Right? We've got children out of school for the summers, and family vacations are over. Right? So when is it a good time for you to start your niche business?
Now.
Yesterday. So start today. This is the time. This is it. Right? How many of you have family attorney partners now in your business that refer? You know, Kathleen does. Anybody else? No? Okay, so next one. Which spouse is your target customer?
Female.
It's any of them. The husband or the wife. The one that wants to keep the house, the one that wants to not keep the house. They are all your target customer. And your target customer also is the one who has not already gone through the settlement, a judgment. That's your target audience. So RCSD, right? We've already talked about the house spouse is the one that wants to keep the house. These are terms that you should keep in your back pocket. The out spouse is the one that does not want to keep the house. They are adamant about selling the house. Okay? I do find, however, I gotta tell you, that the house spouse, the one that wants to keep the house, is your first primary target client. And the reason I say that is because we know that the risk of keeping the home is high. It's more expensive. Oftentimes, there's not the proper budgeting. They can't refinance necessarily for that loan to cash out and give that cash to the spouse, or they have to take less monies from the retirement funds or assets, things like that. How do they maintain the property, right? If they're not going to have the child support or alimony for longer periods of time, maybe they don't have school. That really is your target audience, I believe. Right? We already have an agreement for the out spouse. They don't want to keep the house. So, so the timeline where realtors provide the most help is pre-mediation. Early in the divorce, when spouses are most open to gathering documentation. So, if we know that documentation needs to be gathered, and they're working with a family attorney, what kinds of documentations do you think they need? Financial assets, right? Yep, tax returns, property information, any other family obligation, financials. Right? And we want to be in the beginning process. We want to be in the discovery process as part of that. Remember, I want you to think of yourselves as the project manager when it comes to real estate for these clients, supporting the legal professionals in completing their case files, and for the consumer, helping to preserve home ownership. Okay, so with divorce rates declining, there's one demographic that has doubled the divorce rate since 1990. What did we say? Seniors. Senior divorce. And which age group is that? 50 and above. Gray hair? 50. Silver hair? 60. Yep. So seniors divorcing have property with lots of equity. We know that, right? And many of them own multiple properties. It's a great target audience for you. Oh, I made a mistake. It's not 72% of second marriages anymore. That was back in 2015. So 65% of second and third marriages fail. Not 72. 65%. And do you know that 2/3 of divorces are filed by women?
Why? What's the reason?
I don't know. Lawyers average how many clients per month?
65% are filed by women.
So lawyers average how many clients per month? What percentage of those are ongoing clients with property? I'll tell you. Lawyers average 10 to 50%, 10 to 50 plus ongoing clients per month. So a thriving law practice in divorce has 10 to 50 ongoing clients per month. The average is 50% of those clients own real estate. Huh? For lawyers. Mm-hmm. So lawyers' average cases are 10 to 50 a month. 10 to 50, 50. Yep, per month. Average is 50% of those clients own real estate. So how many, if you were to have 2 divorce attorneys that have thriving practice, and 50% of their monthly clients have real estate, let's say that's 10 clients with real estate, and you have that relationship with that attorney. Could you imagine what that could do to your business? 2 attorneys. You don't need 2 or 3. Right? 2 or 3 could give you an average of 12 new transactions, 1 transaction on average a month, at minimum. What could you do with that money? and think about how many lives you've served, how many families you've served with the right information. So Professor Kelly Murray, she is a faculty member. She's the leading research attorney for around divorce and real estate. She's got a lot of great information. She teaches the course, the RCSD designation course that's coming up on January 27th. Yes, it's here. There's a flyer in the back. This is just an introduction to that course. She has a wealth of information. She teaches judges and lawyers in different states around the United States, both state and national conferences on this particular topic. And I know that in some of the classes I've been in with her, teaching real estate agents, she states that she's just flabbergasted on how much, or how the lack of knowledge around divorce and real estate these attorneys have across the nation. This tells us that you have such a wonderful opportunity to show up as an industry expert around real estate and support these law practices around divorce and probate. It's the same thing with probate. You're still vetting the property, right? Being able to add value to their business and this expertise to their client levels. And when you get that in your gut, like you really get this, you can make a difference. Being of service to the legal professionals and the clients they serve is huge. These are lifelong clients that you will earn. It's not just the transaction. When you do it right and you do it for the right reasons, these are lifelong clients. Can you see how working and supporting and serving these families in a life event like this it's not a happy life event. It's a difficult, whether you want the divorce or you don't want the divorce, it's difficult all the way around. But you have an opportunity to earn these clients for life. Who can say that with just a transaction from somebody who just moved here? It's great. You're going to be great at your job and you're going to serve them really well. But within a divorcing situation, you have the opportunity to stand out above the rest for these families, lifelong. So I congratulate you for being here, for one thing.
Can you tell me what divorce attorneys would interview you and ask, the real estate agent?
Pertinent questions.
I'm sorry, say that again.
Pertinent questions regarding attorneys. What questions would they ask?
Well, we're going to go into that in just a few minutes. But some of the things to think about are, you're adding value to them, right? But there's a way to approach attorneys, right? So how many of you get phone calls from loan officers like myself on a daily basis to do business with you, to earn your business?
Some calls.
Emails.
Sometimes. You're bombarded with emails,
Yes.
flyers. Okay, I won't send you an email.
Why not? Email's better.
Huh?
Emails are better.
It's better so you don't have to talk to them, right? But oftentimes, real estate agents will say, oh my gosh, I'm so sick of all the loan officers. They're everywhere. There's just so many, right? We're like used car salespeople, aren't we? We're just like, oh, give me your business. So what are we adding? We are, I know, I'm in the industry, I get it. Right? Our goal is to show up a little differently. You as a real estate agent, when you go knocking on the doors of these attorneys, they think of you the same way that you think of me as a loan officer. Just here to get the business. What are you going to give me? And besides, how much money do you think an attorney makes an hour?
300.
Huh?
300.
200. I know some that make over $1,000 an hour. Do you think it's appropriate professionally to go knock on their door unexpected or unwanted without that appointment and say, hey, you've got 15 minutes, I want to share something with you? Probably not. I just want to drop off my flyer. Do you think they care? And most of them have a gatekeeper. If you had a gatekeeper, what do you think she or he's going to do for you?
Adios.
In the garbage. You are more important than that. You have information and you can add value. They will never understand until you can sit with them. Right? And do you go sit with this attorney when you finally get the appointment by yourself? Never. You always go with a partner who knows this information. Who knows this information? Who's your best partners?
You.
Loan officers and title reps. Title reps are great partners for you So if you don't have one that you trust and like, find one. I have got a number of them. So 40% divorce rate in the United States. 55% of divorced spouses will remarry. 28%, which is a half, remarry within 3 years. So not only could you help the clients identify risk, possibly sell the property, you've made friends with the out spouse, he or she is going to buy a new house, right? Remarry, they're going to remarry and maybe buy a new house with their new spouse. Does it work? Is your brain working?
Yes.
Figuring out those numbers? So 65% of the second, third marriages fail. 2/3 of divorces are filed by women. And monthly clients, we went over this 20 to 50 plus 50% own properties for the lawyers' case files. Here's a case study. 1 divorce, 2 lawyers representing the wife and husband, 12 properties, residence, rentals, warehouse, unimproved parcels. That's huge. How many of you do both residential and commercial? You get, so if you're not doing any commercial sales, do you get like referral? You get referral commission, so you can partner with a commercial person. A lot of my clients have commercial property. A lot of our business owners have. So in this area. So Professor Murray, she's a co-founder and faculty member of Stanford. She graduated from Stanford and Harvard. She's on the faculty of the top 20 law school. RCSD is basically elevate your education. You can get this designation from her. There is no ongoing membership. You can participate in the class that's happening on January 27th. She's going to teach you things you would never even think of. So first of all, we talked about a gap in the appraisal, right? What's the gap in the appraisal? So we get the valuation from the attorney. It says go get the appraisal. The clients get the appraisal and it has the value. Great. So now we have the attorney taking the value and they're going to divide that up as part of their assets, right? Assets and liabilities. But is that the truth? So the gap is the inspection, right? So the appraisal doesn't show any property inspection issues. That's the gap in valuation using an appraisal.
But can you do appraisal?
That's just one thing of probably a good 50 that you'll learn.
Can you use appraisal later after inspection?
Well, you could use appraisal in the beginning. It's just one part of the process. But in addition, one of the gaps in the appraisal is it doesn't identify any kind of property defects or repairs and things that need to be considered in terms of valuation and ongoing maintenance of the property. Okay, that's just an example. There's so much more. Not only that, but let's say there's a real estate agent that meets the family and they want to list the house, right? Or they maybe don't want to list the house, but they're interviewing real estate agents. If you have information that maybe the other real estate agent doesn't have, in being able to talk to them about things to identify that maybe the appraisal is not going to show up. If you can learn some important things about insurance and a departing spouse that maybe the other person didn't know. So I'll give you a little tip on this one. So do you know that if here's one that you all can use. How many times have you helped a buyer buy a house and the lender tells the clients, oh, don't worry about putting it in a trust, you can title it in the trust after? Have you ever heard of that?
No.
Yeah. Why do you think lenders say, oh, you can title it in the trust after? Because it's so much easier. Because it doesn't have to go through an operational compliance review of the trust to make sure that it can. But really, it's so easy. We just need the trust certification as long as it's a revocable trust. We need just a copy of the certification and the notary page. That's it to title in the trust. So get this. If you have, the primary buyer, so we have two buyers, the husband and wife, let's just say. The husband is underwritten, he's a primary buyer, for the hazard insurance. So the spouse is a beneficiary of that insurance policy for coverage, right? If now they have their coverage underwritten under the name of the husband, and then 2 months later they put it in the name of a trust, the title, what do you think happens to that insurance policy? It's possibly no longer valid. Did you know that? Guess what the insurance company has to do so they don't have to pay that family out? Huh? They only have to pay them the amount of policy that they paid for that year. That's it. Why? Why? Because the policy was underwritten under the husband, not the trust. So what can you go back and tell all of your clients? Do you all have past clients? Guess what? You have a tidbit of information to reach out to all of your clients right now. Call them up and say, hey, have you titled your property in the name of a trust after you purchased or refinance? If you have, I want you to contact your insurance company and tell them that you've titled the property in a trust. And they need to send the trust to the insurance company and have it underwritten and the policy updated correctly. That's your New Year's gift.
Have you titled your property in your trust?
If they have titled the property in the name of their trust after their purchase or their refinance, and they did not inform their insurance company, they need to contact their insurance company and tell them that they titled the property in the name of the trust and follow the instructions of their insurance agent to make sure it's titled with the insurance appropriately. Here's another thing. If that spouse, that husband who's out of the house, is the wife still the beneficiary of that insurance policy? The answer is no. She is no longer the beneficiary of that insurance policy. Because in the state of the insurance policy, the terms states that that person that was underwritten needs to be living in that house for that policy to be in place.
Are you talking about life insurance?
House insurance, hazard. Homeowners insurance. So if the house spouse stays in the house, it was not underwritten on the hazard insurance policy, and the out spouse moves out and he was, what needs to happen? They need to let the insurance company know that he is no longer living in the property and get the proper coverage on the property. That's my second tip.
So if the insurance company does pay them out, do they pay it to the husband or the wife or half?
Whoever, well, if the wife is not on the insurance policy, they will pay it to the one that is underwritten on the policy. And they can have both. So that's just 2, 3 very important things that you can learn with Professor Kelly Murray. I am just a high-level messenger, right? She's the attorney. There's so much more. You could see, it's a big niche, right? It's a big deal. So, real quick, before we go grab lunch, 1 to 3 lawyers referring you, right? And they have 10 to 20 ongoing claims a month. 1 divorce equals 1 to 3 transactions for you. Because we know, high level, the risk of keeping the property is higher than not. So, most likely they're going to sell. So, basically, it's an ongoing referral source. What do you think it would cost you for this kind of a lead generation? How many of you pay for Zillow or any other kind of paid online lead source? Nobody? 1. I have 1. Come on, raise your hand high. Don't be ashamed.
How much did you pay?
2.
How much did you pay?
Well, it doesn't matter how much she pays. She pays. That's kind of private. So what I want you to know is it doesn't cost anything for this kind of a lead generation. How many know that building deeper and higher trust relationships is going to build your business ongoing and set you apart compared to being an online real estate agent? Do you realize that? Right? The millennial generation, and I know you've heard this before, but I can't stress it enough. They go online, and what do? They get all the information, and they think they know it all, right? But where do they go after? They want to sit with you. They want you to tell them that their information they have is correct and they trust you. I don't want to go on Quicken Loans and get my loan necessarily. Yeah, I've got a really good rate, but I'm not going to look at my house. Right? If I go to a real estate agent online, how do I know what kind of business they have? Where do they go? They go online to be able to research and get all the information that they think they need to have, right? And then they want to meet with somebody that they trust and that they value. Where do they get those referrals from? They get them from their parents, their friends, their colleagues, their families. What I want to share with you is that when you build these relationships with legal professionals, they need you. They don't know what they don't know. They don't know what they don't know. And if you could get 1 to 3 transactions from these divorce attorneys, that's not just divorce attorneys. Who else works with divorcing families? Legal mediators. They know even less. You could, if you're afraid to go work and talk to a lawyer, which many of us are, let's face it, they're intimidating. Right? They know it all. They're smart. They're smart. They just don't know what they don't know. And you have the information to be able to provide to them. But what if you could work as legal mediators and build relationships through them? They don't know anything about the real estate side. That's a place you could start. But who do legal mediators know? They have relationships with family law attorneys. Because in the case of when these families come to legal mediators first, and they can't help them and they can't agree, where do they go? They refer them to the legal professionals, the lawyers. So that's a great. Does it cost you anything to have coffee? Maybe coffee. With legal mediators? No? Where could you go to meet attorneys? Yeah.
Affiliations. That's-
Like?
There's family law, God, I got it written down at home. There's family law groups
Yep.
that are usually the advocates that are dealing with, like Sacramento and dealing with laws and stuff. And they all have foundations that they all can turn to.
Yep.
It's very important. I find it's a good way to go.
So here are your best partners. Mortgage professionals who understand divorce and real estate. Divorce and real estate transactions are very different than just pre-approving for a transaction. They are, I promise you. Title reps. Why are title reps good for you? Build relationships with. You want to pull title on these properties that you're helping these clients with, right? In the case of the missing or mysterious HELOC used as a bank ATM, right, that the other spouse didn't know about, right? So if you have a client with a home equity line of credit and the spouse is no longer living in the house, the other one, what are you going to advise your client? We know that the home equity line of credit is there. Should there be a freeze on that account?
Yes.
Right? There should be a freeze on that account. So the other ones are appraisers. Appraisers are great. Legal mediators. Financial advisors, another really big one, like our guest and a host in the back for lunch. Actually, Liz or Larry or both, share with us how you can add value in a situation for our real estate partners as a financial advisor working with divorcing families.
Sure, absolutely. I think what you were talking about earlier, when you bring the value is when you're assessing whether or not that the spouse who leaves or the spouse who's going to stay with that home, that's where we can bring in the value, take a look at their income, work with someone like you, and make a determination on whether or not they're actually going to have the cash flow to stay in that house. And that helps you have that validation if you're going to list that home, that you have sort of, here, I know the proof is right here. It says on the paperwork here that we've gone through with the financial plan that the best course of action for you is to sell. Or here is how you can stay, and this is the best course of action. So it's very objective advice from that way.
Yeah, and I think some of the important stuff you do too is to be able to help that spouse understand that budget of maintaining that property and those living expenses that are going to, occur while they're maintaining their lifestyle. And then I think too, having that conversation with their financial advisor or the lender, we're partners, right? Identifying what is going to be the costs or the family cash flow budget of keeping that home when child support and alimony payments are no longer being made, right? Nobody has those conversations. I can guarantee you, every conversation I've had, nobody talks to the spouse about that part of it. Okay, what's the plan going to be when you no longer have the child support? Nobody talks about that. I'm telling you. You have an opportunity to have those confident conversations with your partners and with your clients about that piece of it. So let's talk about, actually, why don't we get lunch, since it's here? Why don't we take a little break? I'm going to the lawyer part. A little bit more? You having fun?
Too much.
Yeah. I hope so. You're all looking at me like, oh, are you scared?